And good morning and good afternoon, everyone, depending on where you are in the US. And welcome to our webinar and Q&A panelist discussion today around Instacart strategy for CPG brands. I am your moderator today. My name is Jamie Dooley. I'm a partner in the e-commerce practice for the Partnering Group, or TPG for short. So PacView and TPG are co-sponsoring today's webinar. We have a packed agenda today. We already took a number of questions from the registrants, so we have a lot of great stuff to go through with regards to Instacart. So we're going to jump right in now, and just a reminder to everyone that we're recording today's event for future posterity, so we're going to do our best not to say anything inappropriate, but I don't make any 100% promises there. So as we look at our really esteemed panel here, I'm going to start by introducing Todd Hassenfeld, who is the Senior Director of E-commerce at Simple Mills, which is a high-growth, female-founded health and wellness food brand in crackers, cookies, baking mixes, and soft-baked bars categories. Todd has versatile experience with leadership roles in both brick and mortar and e-commerce channels at large corporations and startups. So Todd, thanks so much for joining us for this discussion today.
Happy to be here. Thanks for everyone that joined.
Great. Next up is Tim Madigan, who is a digital commerce partner at TPG. He was previously Vice President of e-business and e-commerce at Tyson Foods, and his background also includes having held e-commerce leadership roles at SC Johnson as well as Procter & Gamble. Tim, thanks so much for joining us for this discussion as well.
Yeah, glad to be here.
And then last but not least is Melissa Burdick, President of PacView. She's an expert in designing for online and e-commerce marketing strategies. She was a 10-year Amazon veteran and was an early leader of the Amazon Media Group. So Melissa, thanks so much for joining us, and for PacView for co-sponsoring today's event. And I know you wanted to say a few words about PacView as well.
Absolutely. Thanks for having me. Excited to be here, talk Instacart. So for those of you who don't know us, we're an enterprise platform. We're a SaaS technology that sits on top of the APIs, unifying retail media. So we help brands with their advertising strategies in technology across Amazon, Walmart, Instacart, Target, and a whole slew of retailers that you can access. So excited to be here and talk about Instacart and kind of the rise of retail media as well.
Great. Well, we're going to dive into all of the questions we received prior to this about Instacart, as well as wanted to leave it open for you guys to ask questions in the audience as well. But before we do that, some of you may not have heard of who TPG is, so that's the Partnering Group. We are a retail and CPG growth consultancy. We've been in business for over 25 years. We have over 250 clients in 45 to 50 countries, and we have helped the world's largest brands and retailers scale their e-commerce sales and capabilities, both on the supplier side. About 2/3 of our clients are Fortune 500 and other CPG manufacturers, as well as on the retailer side, as you can see, the technology side with companies like Microsoft, Facebook, Salsify, Intel, and others. And as we talk about Instacart, just a quick plug for us. TPG offers solutions that help brands build their e-commerce strategy, as well as their organizational structure, content, merchandising, and marketing around Instacart. And then we help brands build their Instacart activation, planning strategies, and execution as well. So before we jump in, one last housekeeping thing. We want to encourage everybody to ask questions during the webinar. So if you have a question, feel free to enter it into the Zoom chat. And we're also going to test the polling functionality now and just ask you a couple questions about yourself. So I'm going to ask Amanda here to put up the Instacart polls right now. Question 1, are you actively advertising on Instacart today? So if all of you could just select which one applies to you. Yes, for 1 year or more. Yes, but for less than a year. Just getting started with Instacart, or not yet. And then the second question that you'll want to answer is, in 2 to 3 years, where do you see Instacart? Do you see Instacart as growing, declining, going out of business, becoming a nonprofit, or not sure? And not to bias everyone, but my money is probably not on Instacart turning into a nonprofit. But that's just me. I'm not a psychic.
Todd probably agrees with you.
Yeah. Then moving to the third question, who is Instacart's biggest competitor? Is it Walmart OPD? Is it GoPuff? Is it DoorDash, Uber, 1-800-Flowers, or none of the above? And some insider info there. 1-800-Flowers was my contribution towards the choices, because that's where my money is as on their biggest competitor.
Sounds like my volume's having some problems again. Sorry about that, you guys. Let me see if I can.
Great. So I think we're going to close the polling out in just a moment now. If you still wanted to answer these questions, feel free to enter them into the chat too, or it's good to help us get a feel for what all of you in the audience are thinking about Instacart. Okay, and Amanda, do we want to close that out now? Great. We're going to keep moving here. So before we jump in, we wanted to do a quick overview of updates and news and just set up some basic primer knowledge for Instacart. So Tim is going to take us through just a summary of some of Instacart's fundamentals here. So Tim, do you want to take control?
Okay. So let's see here. There we go. So while e-grocery overall did really well during COVID, Instacart was by far the clear winner within e-grocery. There were reports that said they grew to own 50 to 75% of the total e-grocery delivery share of the business during COVID. So this is why we're here today, right? Because Instacart is just, not only are they in the headlines, but they're actually making a significant impact to CPG and retailers' businesses. Instacart really won across all different fronts in increasing the number of orders coming in, the number of shoppers joining their platform, their average basket size increased, and they also brought in a lot more grocery retailers to their platform over the last year. What's been really interesting to watch is now they've expanded even beyond grocery to include non-food retailers like Best Buy and Bed Bath & Beyond. And then recently, the big announcement was Walgreens is joining the platform. So, Instacart has just exploded in both shoppers and retailers, just making their presence nationally so much larger. Just for those who aren't quite familiar with how Instacart works, there's really three big buckets of solutions that Instacart offers. The first one is the classic delivery model, where you go onto the Instacart app, you place your order through a retailer that's participating in your area, and then an Instacart shopper goes and shops the retailer and then brings in the delivery to your house within a couple hours. A similar kind of take on that is pickup. It's not quite as broadly used or instituted across retailers. So this is one that you won't see a whole lot of, but it's pretty similar. It's just instead of a delivery to your home, you go to the store and get it delivered to your car. And the third model, which is we'll spend another minute on, is just the white label model. And this is where essentially a retailer is turning over their grocery business to Instacart to operate on their behalf. And Costco is a classic example of this, where if you go to Costco.com, the grocery section of Costco is really managed by Instacart, both the site experience as well as the delivery and fulfillment experience for Costco. And then you can also go through the Instacart app and shop on Costco. So it's just an interesting new capability or newer capability that Instacart is offering in partnership with retailers. One of the big questions that's asked is, well, how do you determine what price is going to show up on Instacart? Who owns that? And the answer is the retailer owns that decision. There really are two ways that retailers partner with Instacart. And again, Instacart does customize how they work across different retailers, but broadly speaking, the way they work with the retailer can determine, I'm going to reflect online the same price that is in store. We'll talk in a minute about the financial model and what the implications are to the retailer, but essentially the retailer has to pay Instacart as well to do this fulfillment service on their behalf. So in this instance where the retailer is just passing along the same prices in store, the retailer has to find some other way to pay Instacart for doing the service for them. The alternative model is this upcharge model, where the retailer tells Instacart to have it at a higher price than in store. And so that's how that margin is how the retailer can start to offset some of the costs that they have. And this is just an example. Again, the amount of the upcharge and how much per category, per product is charged is completely up to the retailer. And you will see anything from roughly 8 to 13% as a usual upcharge. This just intends to kind of capture the latest that we've seen in the market across a pretty broad spectrum of different kinds of retailers and how they're working with Instacart. Retailers can choose how they want to partner with Instacart, and sometimes they'll partner with them even if they have really strong e-commerce capabilities. And Walmart's a great example of that. Costco, we just talked about, is another example. Costco has a very strong .com business, but they're essentially leveraging Instacart for their e-grocery. Publix is another example where they're using Instacart really end to end for pretty much all of their e-commerce capabilities. So one of the big questions is if e-commerce is becoming such a big part of the business and e-grocery is becoming more and more strategic, why would a retailer sort of outsource that, if you will, to Instacart? Well, one of the reasons is because the retailers don't have the capability today to really offer a competitive offering versus whether it's an Instacart or an Amazon or anybody else in the market. It's really challenging to put that infrastructure in place, get the resources in place, and do it as efficiently as Instacart does. And this is sort of a blended average of some of the work that we at TPG have been able to do in assessing what those fees would look like for Instacart to do the service or a retailer to do the service. So on the left side, you can see Instacart fees to a retailer is, in this example, about 10% of sales is what Instacart would charge a retailer. But if a retailer were to try to go do that same service themselves, there is a picking cost of roughly 14% of sales, depending on how efficient that retailer is at doing picking, and then a delivery charge that the retailer has to incur. And we had roughly that delivery charge would be about $10. Sometimes there's a fee to help offset some of the costs. So we said roughly 2% on average would be what the retailer's cost would be. So in total, the retailer's cost to do a delivery on their own would be about 16%, where Instacart's only charging 10%. So Instacart advantage to the retailer is roughly 6% of sales. And oh, by the way, you don't have to go build out the infrastructure, manage a site, build the team, all of the other things that come with the retailer having to do this themselves. So this is really one of the main reasons why you saw this takeoff of Instacart, especially in a time during COVID when retailers knew they had to get into the space really quickly to meet the shift that they were seeing with their shopper behavior. Now, is this sustainable? Where is this going? Well, that's the purpose of the rest of our time together. Jamie?
Thanks a lot, Tim, and that's super helpful. We had so many questions asking the very similar question is, why aren't retailers just going to eventually do this for themselves? So this definitely helps give some insight into why that's not necessarily going to end up being the case for the over 500 retailers that Instacart's currently managing right now. So let's dive into some questions now. So probably one of the most common ones we got was, Instacart's growing, but do we see it as sustainable? And Tim, you just referenced that. Also tangentially, where do we see Instacart going in the next 2 to 3 years? So I'm going to start off with Todd. Todd, what do you think there?
Yeah, and I think, great insights and data from Tim there. And when you look at Instacart and being sustainable, definitely. And, 3 reasons. One, can they stay ahead of that curve like they are now? Can they be a good value and ahead of the logistics curve than their retail partners? If you look historically, Instacart has always been a solution in key times for retailers. When Amazon acquired Whole Foods, a lot of retailers went to Instacart to figure out this online grocery thing. Then you looked at last year with COVID and how fast you had to scale and consumers doing online grocery at the rate that they were in the adoption. Instacart was there for them as a solution. So, as we look ahead here, I think this year is going to be, and already is, a test and learn year for a lot of retailers, and everyone's trying to, have everything figured out, what the new normal is going to look like. But as long as Instacart can stay ahead, whether it's with micro fulfillment centers or just a better value, I do think it's sustainable there. I think the other part from a brand's perspective, with everything that happened last year, look at what Instacart did, creating the ISIP reporting, really providing data to brands. So to really unlock that investment and that kind of data. And while we always want more data from all of our retailers or all of our partners, Instacart has done a good job of showing, brands, hey, the consumers are with us. We all know that. But then also here is how you can, differentiate yourself within your category. Here's different options, and we can show you return on investment. I think other things they can show brands too is they don't have any third-party resellers like some other platforms do, right? There's no lost buy box issues on Instacart. And then also when you look at it from a cost per click, your CPCs, they have been a better value there when looking at others, either retailer.coms or an Amazon. So if they can continue to provide that value and unlock investment from brands, stay sustainable. And then the last part is from the consumer standpoint. They have a huge head start. Consumers don't change apps typically, right? And they got all the app downloads last year and did a great job of delivering and satisfying consumers. But when you look at this, can they continue to be sticky? You look at the kind of the models, Amazon Prime and all the other benefits that Amazon does, as well as Uber, right? Uber has rides and eats, and they're trying to get in here and they're partnering. And they're partnering with GoPuff, which has the 30-minute or less delivery. But in true Instacart fashion, they're pivoting already, right? And they're adjusting. Their partnership with 7-Eleven has just expanded in the last week or two, I believe, to really offer that 30-minute window. So as long as they can stay sticky with the consumer and the other factors I mentioned from a brand perspective, as well as staying ahead of the curve for their retail partners, yes, I do see them as sustainable.
Great, thanks, Todd. Tim, anything you want to add there?
Yeah, no, I agree with Todd. I think it's really going to come down to retailers' strategies. I mean, Instacart is a platform of retailers today, and the benefit they have is both the amount of retailers they have on the platform and to Todd's point, the growing number of consumers or shoppers that they're adding to the platform. If retailers strategically are kind of willing to continue to seed e-commerce to Instacart and kind of not have to make that big investment in e-commerce, then Instacart's going to continue to flourish as it is over the next several years. The risk for retailers is seeing what happened to Toys R Us and Target a decade ago with Amazon.com, where they outsourced their .com business to Amazon, and it really did end up costing Toys R Us their business and took Target years to, once they moved off the platform, to kind of build their own and catch back up with a Walmart and some of the other major platforms out there. So the question to me is, are retailers going to continue to just let Instacart own the e-grocery experience on their behalf for the foreseeable future? So that I think that's the big question for me. And then Instacart has this massive shopper platform, which is a huge value to retailers. And so that's the juxtaposition. If you move away from Instacart, you're also, abandoning a tremendous amount of shoppers who are now wanting e-grocery. And will they still stay with your banner, or will they just find another Instacart participating retailer to move to? So that's the strategic question that they're up against.
Great. Let me flip that question around a little bit, Tim. We talked about it from the perspective of what retailers might do, but in the news a few months ago, a lot of the news headlines coming out were around Instacart opening up potentially their own micro fulfillment centers, and I think a lot of brands and partner retailers were just asking, what up with that? Are they gonna disintegrate all of their partnerships and try and become a freestanding online retailer on their own? So I'll open that up to the panel, and I think I know that at least one of you has some intel on that. what's going on with the MFCs and Instacart, and where does that play into where we think Instacart may go in the next few years?
I think this is all conjecture, right? No inside information here, and all speculation. But Instacart is going the opposite. Instacart's made very clear that they do not want to become their own grocery chain, right? And they want to work with their partners. When you talk about these MFCs, I think that's where you see what Kroger's doing with Ocado, and there's others testing different between AutoStore and Fabric and a number of different MFCs. Great test and learns. Will some figure it out from a retailer perspective? Sure. Will all of them? Probably not. There's probably not enough land to put micro fulfillment centers in every key area for all the different retailers. So I do think that could potentially be, and the next step, like I said, going from the Whole Foods acquisition to COVID, the MFC network, or having the concrete poured and the logistics of that and the cost. Instacart could negotiate with their retail partners and be that solution for them. I think outside of the MSC, just looking at maybe a couple of threats as well. And again, just speculation here, but you look at the gig economy as well. How is that going to be defined? And whether it's defined as it is now, it's not going to become employees for anyone like an Instacart, for personal shoppers or others. How many gig workers do we have? We've already seen Uber and Lyft having to pay kind of sign-on bonuses to get drivers. And then I think, just retailers, do we have an exclusive deal type thing coming, where I don't think it'll happen this year, but do you have something where you start looking at different, whether it's Instacart or their competitors, do retailers try to, single out and have a negotiation just to partner with one? Again, I don't think these things will happen. I think Instacart has proven they can pivot quickly, but I think that micro fulfillment kind of operational logistics part could be the next step potentially.
Yeah, just to really quickly build on that, I think Todd's talking about those cost drivers and how do you make those things more efficient. And as retailers can continue to reconsider, do we outsource to Instacart or do we do it ourselves? If you remember that math we just did a little while ago, the lower Instacart can bring down their costs, which is the gig drivers and more efficient picking through your MFCs, the more competitive they're going to be, or the better they're going to look versus a retailer trying to go do it themselves. That gap just gets bigger and bigger and bigger, and more challenging for a retailer to say, geez, do I really want to try to do this myself?
Great. Thanks, guys. We're going to move on to the next question, and I just want to close this out and say we're all in agreement that Instacart does not become a nonprofit organization in the next 2 to 3 years. That's what I heard from everyone. Great. So next question, what's the best CPG strategy for working with Instacart? And we'll kind of parse that out. We had questions about how to put their strategy together from an item setups and content standpoint, from structure of their organization, and who should actually own Instacart, and then joint business planning. So let's start with item setups and content, and what's the best way to work with Instacart from that perspective. And Todd, do you want to kick off there?
Yeah, I think as a brand, you have to look at Instacart as you would a lot, most of your retailers, all of your retailers and partners, is communication. And I think with item setups, no different. If you have new items coming out, you have to get Instacart the UPCs, so they're aware and they can set it up on their side. But you also have to think of it from an omni-channel perspective with your retailers. Of course, they're going to set it up in their system for in-store, but they also have to do some things on the back end to let Instacart know and get it live in the system. If you don't do it that way, you're probably going to have to wait 6 to 8 weeks after the product is physically in store. So think of Instacart as you do with your communications with new items and get ahead of the curve there. I think with content is so important on a screen, right? And as shoppers look at that, and Instacart just recently announced the content library, which will give brands more control to control their content and update images, update titles in different parts of the PDP. You can still go through a PIM provider, different services. You can have the retailer can still have control of it as well. But I think with the brands being able to do the changes on their content with the new content library Instacart offered, it will be more efficient. And that helps the consumer, right? If they're finding a lot of new brands or new products on Instacart, to see the more clear content to convert helps everyone. I think also as you look at, just from a setup and content perspective is, thinking about promotions and how you go down the path of if I'm running a promotion in store, how does that impact my online experience, and could you potentially have a double dip? You could. That does happen. But I think you do have to think from a consumer standpoint. It's a little different buying on a screen than it is buying on a shelf. If that helps. If anyone else has anything, go ahead.
One thing, can you guys hear me okay? I got a little feedback from my volume. Okay, good. I would just add to Todd's point about the self-service feature, which is nice to see. We see this across all these platforms, but the power of putting this into more of the brand's hands. I think we're going to continue to see that with more functionality and features, with the ability for people to control that destiny. And so continuing to build out that expertise or agencies to help you with that is going to be key. To help you have the best content, all your items set up. We run into that sometimes with advertising where maybe the SKUs you want to advertise that aren't available. So getting the tip that Todd provided of being able to get those listings available is a good point too.
Excellent. So building into the conversation, org structure. And how should teams be structured around Instacart? We had a question come in from one of the audience members around who should own it, because it really does. It touches so many different retailers. Is it shopper marketing? Is it an e-commerce center of excellence? Is it is it a sales team? So what's your point of view there, Melissa? How are you seeing other organizations structure their teams to ultimately manage and own Instacart?
I mean, this question, the answer is always, it's a hard one because it's so dependent on the organization. Like Todd, I think you have a nimble organization, so you're able to structure it, a certain way that's most helpful to you. But bigger CPG companies aren't, able to structure it that way. So, I mean, the answer to this is kind of the answer for a lot of things, which is, what is the most effective for your organization? I think what happened is Instacart kind of came to be, up and coming out of nowhere because of COVID last year. And it was kind of a scramble because nobody owned it. And so it kind of fell on maybe the e-commerce teams. And right now people are trying to figure out who should own it. Is it one of the ones that you mentioned? But at the end of the day, it's honestly who is best suited to own it within your organization that you are going to have the most effective approach. And it's different with more traditional CPG companies. It may fall under a pure play. It may fall under, whichever organization can best own it and run it. But I would say, Todd, like, who owns it within your organization? What is the most effective for you? And that's an example of a company similar to Todd's company versus, a more traditional CPG, bigger company.
Yeah, and I agree with you, Melissa. There's no one size fits all for this. For us, I came to Simple Mills in April of 2020 in the middle of COVID. Instacart was with our shopper marketing team, right? And they had a relationship already. But as a few months went on and just looking at the importance of search or featured products on Instacart and looking at that PDP and content and how to look at things from a consumer's eyes, we ended up shifting it to the e-commerce team underneath me. And while we shifted it there, the mentality though was, because the product is coming out of the physical stores, but they're buying on the screen, right? It's coming off the shelf, but they're buying on the screen. E-commerce is under marketing at Simple Mills, but Instacart was even more than an Amazon. Instacart was more of a catalyst to connect our organizations, right? We looked at it as, okay, who's not getting credit, but how are we going to connect with the consumer in this new world? And so kind of building the bridges across different departments with sales and even finance, right? Because we had to figure out, okay, how are we paying for this? Again, the volume is coming out of the sales accounts, but I think Instacart was allowed us to have those conversations and really, to your point, be nimble. And I think whether you are our size, or you are a bigger large multinational organization, use Instacart as the catalyst to build those bridges and have the conversations, because the cost of doing nothing and being mired in who's in control and what budget is this coming from and spending too much time on that, you're going to lose that first mover advantage. You're going to lose getting that first card in your category. And that's actually going to be worse.
And the
Yeah,
other,
totally.
yeah, I would just add, this is kind of a twist to that question, because it's not I work with so many agencies that license our technology, but from an agency perspective, in terms of who's working on Instacart, what we're seeing is a lot of consolidation of, whoever's running retail media, paid search, the least, like having less partners on the agency side, the better, where you can kind of consolidate all into one place. And that's what we're seeing, which is someone who's able to kind of have one point of contact in the context across all these platforms is super helpful, because that's a time savings to the person managing it as well. So we're seeing that as a trend, which is kind of, consolidation of all the retail media into one place to kind of have economies of scale there as well.
Yeah, and I think also from the brand side, that's a great point, and I agree with you. It allows you potentially as a brand to be more nimble with your budget, right? And follow the consumer. And so you can shift that quicker versus saying, all right, this is, retailer 1, 2, and 3 and Instacart, and this is what we're going to do for the next quarter. You can have it as a general search or feature product fund and change it weekly, daily, monthly, whatever the consumer is doing and what trends you're seeing. And also who's giving you the most data, right? Who's giving you the most data back? So yeah, I agree. I think that's a smart approach, and glad you're seeing it from a lot of different brands.
Yeah, the challenge we've run into is just the budgets that we typically associate to a trade thing is one kind, and then marketing is another. And Amazon started to create this new conversation, right? What's shopper? What's marketing? What's trade? Instacart is just kind of, just doubling down on the complexity on that, because it really does feel like you're pulling through retailers, and that's more of a trade level activity, but there's plenty of marketing tactics on Instacart too. So that leads to some confusion. I think the biggest point is exactly what you guys were saying around what's the work to be done. And so who in the organization and who are the partners that are best suited to go do that work and be effective and efficient at doing that work. So I think that really needs to drive the organizational decision.
Yeah, and don't just look at Instacart as search or bottom of the funnel though either, right? They have delivery promotions, and about 20 brands every week have a buy 15 get 5 type of deal. And as you talk to a sales team about that, as you evaluate, hey, we want to increase revenue, get more product off the shelf, but we also want to build awareness. You have to look at these even from your in-store options for trade spend and say, is there a halo or a hangover, and what am I getting for this? And I think from like a delivery promotion, the great thing is you don't actually take down your price as you might with a traditional TPR or coupon, whatever it may be, which then can maybe reduce channel conflict in your other accounts, right? So you really have to have these broader conversations on what are your overall goals, and don't just look at Instacart or others as bottom of the funnel. It's awareness too, but also what are you getting? If a sale, a TPR is only getting you a pull forward, that's more your hangover. How do you evaluate each of these to get your ultimate goal as a brand?
Well, Todd, that's a great segue into our next couple of questions is how should brands approach promotions to ensure that the promotion they're running on retailer X also shows up on Instacart? And then on the flip side, how do they approach making sure that the consumer isn't able to double dip, if you will?
Yeah, I will say, so, from an e-commerce perspective, kind of Simple Mills, we tend not to do a lot of online promotions. We do look at search more, but I will say when you approach, for ones that we have done or for brands that are, when you're approaching promotions, again, similar as you think about your other retailers, it is about communication, both with the retailer that you're running that on, have that discussion. Is it or is it not going to show up on Instacart? If you have the control of it, do you want it to or not? As well as talking to Instacart potentially and see if there's anything that can be done to, if you want to give it more exposure, to boost it or not. I think though, you say, how can they approach preventing double dip? I'm not sure, maybe Tim has a different way, but I'm not sure there is that option necessarily, unless you really have in-depth conversations and can stop that. I think you are going to have to plan for a potential double dip. If you have something in store and then you're running, let's say, an Ibotta promotion or something else just on Instacart, you could see that. I think the other part, it's a variation of double dipping here, though, is when you evaluate your in-store promotions, and this varies by retailer, you have to figure out how much was actually bought off the shelf and how much was bought off the screen, because now your pricing, maybe that if that discount was not seen on Instacart, but it was only in store, your average price during promotion and before promotion changes. If there are markups, that changes. So you really have to look at your pricing data in a little more surgical way, so that you're not either, I don't want to say double counting, but you're not looking at it the wrong way with the different online pricing or online double dip.
Yeah, so the nuance there is that the retailer is going to decide what goes on Instacart, which offers go through Instacart and which don't. So again, that was great coaching by Todd, in that you want to have the conversation with your retailer to understand, are they going to pass these through or not. On the Instacart side, if you're doing a coupon, there's 4 tactics. We'll talk about those in a few minutes, but one of them is an Instacart specific coupon. And if you're doing that, the policy at Instacart is, if the retailer is putting forward an offer, that they will not put the coupon on top of it. So there is a policy in place at Instacart. I'm sure, to Todd's point, that there have been instances where there have been an overlay, but that I'm also sure that if you reach out to Instacart, that can be fixed. Again, it's their policy to avoid that.
Excellent, thanks, Tim. As we move from promotions to advertising, closely aligned, obviously, how should brands think about advertising on Instacart, where many of the clients we work with, they already have budgets set up for advertising and marketing for their retailers, and now they're looking at Instacart and saying, all right, how do I avoid the double dip? Where should I budget additional advertising dollars for Instacart, or do I reallocate? So how do my budgets as a brand work in concert with each other for Instacart versus the native retailer platforms?
I'll jump in this one right now. Is when you think about it, it goes back to that data piece, right? And one, follow the consumer, right? And where the consumer is. And we know the consumer is on Instacart right now, as well as other retailers. But I think you have to, as a brand, and depending who you're getting the money from internally, you have to be able to provide return on investment, new to brand numbers. You have to look at, are you winning within your category? Are you out competing the competition? So I think when you think about that advertising on Instacart, it's also, looking at the full suite of options that they have. You have feature products, and you have the delivery promotion that I've mentioned, and you can talk about, are there other betas that they're doing, right? And kind of try to get in some of those for different advertising. I think the one thing is, it may not be that you need to look at this if you're trying to shift funding or figure out where funding's coming, Instacart versus, call it, the native retailer platforms, but rather, is it going to come from a Facebook? Is it going to come from a Google, and everything going on with iOS 14.5 and the death of the cookie and all this stuff that we could have a whole nother call on. But maybe if your efficiency or effectiveness of those areas of your advertising within a brand are not there, then you look at an Instacart or native retailers versus trying to push and pull just within the online grocery space.
Yeah, and I would just add that what we're seeing is people really are allocating a budget to Instacart, just like they do Amazon, just like they do Walmart. So I would just think of it as another, it's where the shoppers are. So you want to spend money where the shoppers are, and then having access to performance of, one of the benefits of these newer platforms is the first mover advantage. CPCs are low. So I posted this nice graphic on LinkedIn where, early days we were seeing CPCs at 50 cents. Wouldn't you rather test at a 50-cent CPC versus a $3 CPC when it becomes a more mature platform and all your competition is there? And so really jumping in early to test and learn and find out what's working for you is really critical. But really just seeing Instacart as a place where shoppers are. And so really seeing it as a separate platform. And then there's a lot of nuances. Each of these retail media platforms have their own nuances. And so it's really building out your strategic playbook for what works on Instacart. Some examples are things like, Instacart doesn't allow you to choose the specific store or region. And so really advertising your full portfolio so that then where it is available, it shows up in terms of in stock. So there's just a lot of nuances across these platforms to be able to learn and understand and build that out. But I would really recommend looking at Instacart as its own entity and platform, because that's, shoppers are all of these places. So capturing them at the right place. And then the really cool thing, the vision that we have at PathView is really being able to kind of manage all these retailer platforms as a portfolio. So for example, we know lower ASP items convert better on Walmart. So you want to pick that portfolio to show up on the top slot of Walmart, and then understanding what works better on Instacart. A lot of people have said their club SKUs, Costco SKUs perform the best on Instacart, or their highest sales or their club SKUs. So really, doubling down on that for advertising.
Great,
Yeah.
thanks, Paul.
I just
Go
think
ahead.
what Melissa just shared has got probably the most profound impact on CPG organizations over the next 3 years, which is brands are really going to need to kind of get their arms around all of the spend going online, whether that's retailer, non-retailer, doesn't matter. If it's digital, the brands need to kind of own it and treat it as a portfolio, in Melissa's words. I think that's where this goes, versus, just kind of pre-allocating funds and then a year later, let's take a look at how it did. It's going to be much more of this portfolio play. You're already seeing some of the most sophisticated players making this move.
Yeah, those are great points. And to that point, one of them about, this isn't just about online either, right? And whether it's Instacart or the kind of native retailers here, but especially with Instacart where the consumers are, the better you do there, the more volumes coming off the shelf, the better it may help you with SKU rack conversations or planograms, right? Either maintain or gain space because of what you've done online, or how consumers may be finding you searching online and then going to the store and buying. So there's the true omni-channel approach. I think a couple other things, just looking at different advertising, kind of rack and stacking this, is you have to look what is a first place auction and second place auction benefit, pros and cons of that. Instacart being a second place auction, the CPCs that we've talked about earlier, but also Instacart allows you to have two different options of how you set up your campaigns. You can do maximize impressions, which will give you the best chance of having the highest win rates and be above the fold, the most often, depending on your budget. But if you want to do a more test and learn approach, or you have limited funds and you have to kind of prove your case out, they do have a paced spending option. So I think as you look at all these kind of nuances, and to Tim's point and Melissa's, you have to start to rack and stack these across all of them and see where the pros and cons of each are.
So as we allude to that, how do brands approach measuring whether they're winning or performing well on Instacart, since as we all know, it's not possible to break out retailer specific reporting through the self-service platform. So Todd, you want to jump in on that as well?
Yeah, I think one part is what Instacart launched in I think it was July of last year, the Instacart Shopper Intelligence Platform, or ISIP, as it's called. And those are monthly reports that you get depending on your percent of spend, right? It's fair. A brand like us that's smaller may not have the budget of our big food competitors. Depending on our percent of spend to our sales, can get the different levels of access to that. And what those ISIP reports can show us is not only our overall sales on Instacart, whether it's search attributed or just overall, but it can show us new to brand, people that are new to Instacart, how many came on, what our how many items per basket were there, how many dollars of our products were in there, if we're up or down versus last year and last month. You can look at your out of stocks. And a nice thing about Instacart's out of stock, it'll show you the initial out of stock, and then if the replacement item was another Simple Mills brand in our case, or if you lost it altogether. Now, you don't have it by retailer, right? And Instacart's been very clear about that. You're not going to get granular level like that, but they do provide, I think it's 8 or 9 different geo regions that you can take a look at where the bulk of your sales are, where you're performing better in a region or not. And if you really want to get savvy and granular with that, is where you maybe, different geos that you're at the bottom of the list with your Instacart performance, is now you can look at that as maybe more shopper marketing spend or different TPRs or whatever it may be. You can look at it there. So I think that's the basic with the ISEPs. But then depending on your relationship with Instacart, their data team has been very clear that they want to keep growing, and they've shown that. Always want to get more data out of them, but you can see things. Where do your SKUs rank within the category, right? Like we know where our pancake SKU ranks within Instacart. You can take a look at your overall groupings, like for us, crackers and cookies, and see, did we outperform the competition? Did we outcompete the competition in terms of growth rates? So these are, some other ways that you can then go internally and say, yes, we have our dollars, we have our year over year growth, but here's how we're comparing to our category. Here's where our SKUs rank. So, they're just starting to come out with some share of voice rankings that, you may have on other platforms for different terms. So there are more and more ways to justify that investment and show that if you're winning or not compared to other brands on Instacart.
Thanks, Todd. So building on those approaches, Tim, I'm going to put you on the spot. We've had clients who have found other ways to do it directly with their retailers. Can you talk a little bit about the ability to push the rock up the hill and go directly to the retailer and ask for the Instacart sales through their retailer relationships?
I mean, yeah, that is it. I mean, so depending on their level of cooperation that you have with your retailer, you can start to get, that level, their percent of sales through Instacart. Where I've seen it to be most effective is when a retailer is actually trying to sell you that Instacart isn't such a big part of their business and it's more about their own e-commerce platform. So you should kind of shift your Instacart spend to their specific platform. And so it's an interesting dynamic and an interesting way to start triangulating. Well, okay, so that means then this amount of my business is going through Instacart. So that's that. I think the only other build I'd have on Todd's point around the metrics that matter is you can get to share and percent penetration through those reports. And to me, that's the ultimate measure of success for a brand. The platform's on fire, the growth is incredible. Those numbers are going to look great regardless. The ROAS it's a pretty generous attribution. I mean, just because of the way it gets calculated, those numbers can look huge, like 11 to 1. And so that feels great when you're putting on a piece of paper, but in reality, am I really getting 11 to 1, or is it just because now my search terms, my paid search terms are the ones being clicked versus my organic ones? And so using share and percent basket penetration are the ways to understand the real movement of your overall business. And I would say that tactics do work. And I have seen that increase with the right level of spend, but you just need to kind of double click into the data a little bit.
Excellent, thanks. And we're going to get to our last question before we try and take a few from the audience, but we can't be on a PackView co-sponsored webinar without talking about digital advertising tactics. So last couple questions around that. What are the key types of advertising campaigns that you'd recommend brands try? And then what are the campaigns that we're seeing perform the best on the Instacart platform? So I guess, Melissa, I'll start with you. What are you seeing as some of the stronger ones that are working for your clients?
Yeah, I mean, paid search advertising, keyword-based advertising works really well. Kind of understanding where are these things coming from. So there's a couple buckets. It's, the buckets are browse, buy it again, did you forget, search, and then there's kind of another bucket. And where the majority of the clicks and sales are coming from is first and foremost search, and then secondly is buy it again. And so the way to get into those top 3 slots a lot of times is through paid. That's one of the nice things about the Instacart platform, similar to the Amazon platform, is it's very flexible. It allows you to conquest and to be pretty competitive. And so you can pay your way to that top 3 placement. And the prize is really getting into the buy it again list, into people's carts. And that is kind of liquid gold to the CPG category, where you can get people to repeat purchase. And so some brands really think of this as a customer lifetime value versus a ROAS. And that's another metric that you can think about as well, especially this repeat purchase. So, that's why the relationship between paid and organic is so important, and really getting into these shopping carts is equally as important.
Great. And Tim, I know you have a point of view on this too. You actually have a couple slides that probably do a good job of tactics you recommend and not. So you wanna chime in?
Well, I think Melissa's dead on. That's the feature products, number one, far and away. I've had an opportunity to play with all four of these, both with the business I belong to as well with subsequent with clients. Number one, absolutely moves the needle from a conversion standpoint. To Melissa's point, not only does it drive the immediate search, but it also puts you in the basket, which is where a majority of shoppers start their next journey on Instacart from. The second one is around coupons. And so that we kind of talked about the fact that Instacart will suppress if you're doing one on their platform and a retailer wants to push through an offer. So it again helps move the needle from a conversion standpoint. We'll flip to the next one and we'll talk about the other two tactics. So the first two are definitely, if you're thinking about driving conversion, delivery promotions, I put a little bit lower in because it is expensive relative to these other platforms. You do need to have a breadth. Typically these work buy 4 or 5 of these SKUs and you get, X dollars off or free delivery. So it's an expensive return and you need a pretty broad portfolio or a couple partners to come in with you in order to make the delivery promotion really pay out. It does move the needle. I've had mixed results on that one, which is why it's a little bit lower on my priority. And then the last one is media. And again, if you're thinking about driving the business from an e-com sales standpoint, which is typically the way I always approach Instacart, those other tactics are higher on a conversion driving scale. This one, again, it's relevant. You're hitting the consumers as they're in the mindset. So from that standpoint, it's a nice media placement. But I put this out as a lower priority as I was looking at my overall spend to really focus on driving the conversion, some of those other tactics we talked about.
Super helpful, Tim. We want to jump to some Q&A that we're getting from the audience. So I'll remind everybody, if you have a question, just click on the Q&A tab and feel free to enter it directly in. We're going to start answering some of the questions we already got. So I'll start with one and let the panel just decide to chime in whenever you want to try and answer a question. So one of the questions we got was around share of search and digital shelf on Instacart. So what's the connection between paid and organic rankings, given that the first 3 placements on Instacart are always paid? And when does content relevancy pay off or work hard for organic rankings?
I would say, from the first part of that question on the search, and I can say we've experienced this as we progressed last year of, more investments and, going to the agency support. As we got better at search and appeared at the top 3 or above the fold in those top 3 slots, we did see, and while you're not going to see the repeat like you can on Amazon, if you have it, say Simple Mills chocolate chip cookies, only the paid one will show up. You won't have that organic one. But when you start looking at just cookies for us, you'll see us higher up on an organic slot versus the paid one. So I do definitely think there's a connection there to show that the paid advertising does work. In terms of the content, I'm not sure, maybe Tim or Melissa, you have more perspective on this, but I think it may be coming maybe with the library piece. I haven't seen content move it as much as say retailer.com or especially in amazon.com. I think that may be coming very quickly here with the library, but I'm not sure currently if that's going to help your relevancy yet, but curious on Tim and Melissa's perspective.
I mean, content always gets you on the right shelf. If you do that, if you do content well, you show up and you're part of the consideration set. I mean, Instacart's own data says if 70% of purchases come if you're in the top row, top 3 rows dominate like 88% or something of their search. So being high up on the shelf makes all of the difference, which is why promoted or feature products is such a powerful tactic because it gets you up there. Not I heard every time the top three are taken. I'm not sure I've seen that every time, but it definitely helps when those categories are very competitive. That will happen. So, but I do think content does play an important role, and you do have the ability to overlay your own content on top of whatever's existing on Instacart through the couple ways Todd's already talked about.
I don't have a specific answer to this question other than to say these platforms are changing so fast. It's really important to do a lot of experimentation and experiments and test and learn to see what's happening, because it's literally the algorithms are changing each week. New functionality is being released. So maybe what we knew was true 2 months ago is not true now unless you're actually running experiments because of the speed at which development is happening. I mean, it's pretty insane right now. So I don't have a smart answer to the answer to this question because I haven't run the experiments yet on content specifically, but I would just encourage all the brands to run experiments and keep it updated because things are changing so fast right now.
Yeah, and overall, to that point, the focus of content should be converting and connecting with the consumer, right, versus confusing them. So while it may or may not help with relevancy yet on Instacart, to Melissa's point, test and learn, make sure that you're connecting with the consumer with your content, no matter what the site. The relevancy is an added bonus if it happens.
Excellent, thanks guys. Next question I see came in, it's about coupons. My understanding is that coupons are no longer available except for Fortune 500 CPGs. A lot of administrative hassle and not necessarily good returns for smaller CPGs. Please confirm. So Todd, I'm going to throw that to you. Have you worked with coupons recently? Or are you seeing that they're still available? And then probably the second question is, are you seeing that the return's been good on them?
Yeah, I'll go back to I think we're Fortune 501, but so I can't talk in that camp. We're not a big coupon company. We really rely on kind of the features and benefits of our products, and then looking at the search piece of it. So I will say though, overall, just in different share groups that I'm in, I think when, again, it depends on where your priority and what you've prioritized for your spend. If you're looking at coupons first ahead of search, or even the delivery promotion kind of that Tim went through with those four, I think you're not going to win as much as you would if you invest in search, right? So it depends on where you're sitting at the table on that perspective. But I don't have a perspective there. One, we're not doing a lot of coupons and not in the top 500 yet.
Great, thanks, Todd. Yep. We have time for probably one last question, then we're going to be out of time. So I'm going to take it from that just came in. Is it feasible to select a group of retailers to focus on with Instacart advertising instead of selling across all the SKUs where it's distributed, all the retailers that it's distributed, I'm assuming he's saying. So I'll open that up to all of you guys. Can I just say I want my top 10 retailers via Instacart to be focused via advertising, or do I not have a choice?
No, I mean, the only way is if you have unique UPCs, right? And that's probably not the case broadly. It's more probably the case with your club UPCs that will be unique from others. But no, there's not the option to say, I want to look at my top 10 accounts or top 10 retailers and only advertise with them. That is something that is not a capability yet.
Yeah, you pick the SKUs, and those are driven across anywhere they're distributed on those retailers. So that would be the strategy there.
Great. Well, we are almost out of time, everyone. We do not have a chance to get to everyone's questions. So we will, what we will do is we'll follow up with everybody to try and answer the questions that we didn't have time for. We did want to just leave one parting thought that we're giving away a couple free value adds for everybody that was able to join us today. So Melissa, I'm going to let you talk about how everybody can enter to win not only a free Instacart paid search audit, but also a 2-hour Instacart growth workshop with TPG.
Yeah, here's your chance to have Tim, myself, Jamie, and Todd may throw in some pancake mix. Would you? Can we throw? Yeah, he says yes. So we're offering to, so if you guys can go to pacview.com/pacview-strategic-consulting right there. If you enter in your information, we will select a lucky winner to have the 3 of us plus some pancake mix to do an audit plus a grow session. So we'd love to offer that to you. In general, we do audits and help people with their strategies, but you know, we'd love to be able to offer this to this group that's been so engaging, and we look forward to hopefully doing that, and then we can all bake some pancakes together.
It's a perfect plug. We just launched Just Add Water pancakes and no added sugar pancakes at Simple Mills. So yeah. Perfect. I love it.
Love it. Love it. I'm sold. I want to participate now that I know there's free pancakes involved. Well, I want to thank everybody for joining us. Thank you to the panelists, Tim, Todd, and Melissa, of course. Our contact information is up if you want to reach back out to PacView, Tim, myself, or Todd. All of our contact information is here on this slide. We recorded this, so for anyone that you feel like missed it in your organization, happy to send you the recording and the slides afterwards. And then feel free to visit pacview.com or the partneringgroup.com if you want to learn more about working with either of our organizations. So I will steal a final parting line from one of our famous colleagues in the e-commerce industry and say, happy commercing, everyone, and have a great day. Thanks so much.
Bye.